What is going on, everyone? So I'm super excited. It is Sunday before market futures have opened, and I have brought the legendary market analyst Gene Inger back on the show. We have a ton to talk about. We're going to talk about tariffs. We're going to talk about market, the unpredictability and uncertainty. So without further ado, let's jump right in.
Good afternoon from Florida. How you doing?
What's going on, Gene?
Welcome
back.
I'm trying to relax and energize myself as an intermission before the next act of this dramatic saga resumes overnight and tomorrow. Cheers.
We both cheers. We both have our coffee and our painkillers to get through this market. And
well, I don't feel like I need too many painkillers because I have argued for, my God, half a year to avoid the overpriced mega caps. Probably too soon on exiting some of those last fall, even before the elections. But I felt the Trump honeymoon was an opportunity to lighten up on those, not buy them. We never chased them. And all of the big caps, I mean, like I own some Apple in a retirement account from around $57 a share. That's different than buying it more recently. I own Chevron from maybe 20, and I own one that's done nothing in years, which is Ford from around 9. But that's a different account, which I don't touch. So to me, I've argued for domestic-centric, primarily AI and what I call new era technology stocks for some time, but not the huge ones that already moved up in price, which would explain why I preferred a SoundHound over a Microsoft or a BigBear over a Palantir. We liked Palantir 2 years ago, 1 year ago, but the easy money was made and you were betting on taking an expensive stock and having it go higher. So I don't feel too bad sitting with what I'm sitting with in this market environment with patience.
So let's talk specifically about the QQQ, which if we look, I think you can see my screen here, but if we measure the move from, let's go back to the 13th of February to where we closed, we have dropped 20-ish%. So when we look back at the Qs and we go all the way back to COVID and we go back through historical times in the market, this does seem like a historically sharp sell-off. So how does this compare to you for other sell-offs you've seen in the market? And what is potentially different or the same about this sell-off?
You have about 2 hours. There are many distinctions and similarities. And one of the distinctions is that none of the previous sell-offs in our lifetime, including my longer lifetime, has related to a change in the global order, which is what you're seeing now, or at least an effort at that. And therefore, more so than usual, you have to look at the economic fundamentals and the known unknowns, because we know what we're dealing with and we know the outcome is unknown. And that is going to dramatically impact where the market stops going down. And that's why I wrote in my weekend report that if the market were to find dramatically favorable news over the weekend, that changes the dynamic. That dynamic is giving hints today with respect to Vietnam, even Taiwan, even Thailand, I understand, of caving in to Trump a little bit. And of course, you had Musk's comment that I suspect everyone knows about by now, relating to a free trade zone, a desire between the United States and the EU. If that were to happen and the EU were to give a favorable response now, this evening, which is Monday morning in Europe, the market would zoom rather than tank Monday morning. But even if it zoomed, it would still get hit with delayed margin call liquidation from Friday's decline and Thursday's decline. And the significance Friday was not so much the technical level, but the fact that it was the highest volume day. Because when you look at the point movements, as you correctly point out with the QQQ or the S&P, what you have is one of the largest point drops, but not percentage drops, because again, inflation adjusted, and look where the market was in 1987 or even the 2000 tops.
So I've gone back here and I've actually measured the move of COVID. Mm-hmm. Okay, so while people were dying by the hundreds of thousands and the global economy was shutting down, and that move on the Qs was 28%. And so how does that compare to what we're experiencing now in this market?
I don't think it does compare in a sense, because when the COVID low took place, which is, I believe, around March 22nd of 2020, I had been bearish all the way down because I had done a seminar. I think we talked about this before. And I had two people that were Chinese that were visiting Florida and were in the audience. And that was the first I was hearing about people panicking and evacuating Wuhan, China. And the next morning, I alerted which was early February, first trading day, I alerted our subscribers to that. And but on the 20th or 21st, something like that, of March, the Fed said they were going to be behind the American economy. And I said, go long. The market's going up. This is a generational buying opportunity. And it was, which is similar to 87. But in essence, had the Fed not said that, I don't know that the market would have bottomed at that point. You could look at 1929 and the huge crash, which, by the way, was followed by a snapback. And some of the biggest snapbacks have occurred within bear market context, as you probably know. But after that, they approved the Smoot-Hawley tariffs. Many attribute that, as being a contributor to the depth of depression and even contributing to World War II, because of the pressures where Japan couldn't get the resources that they want. And Germany already had the restrictions on their military buildup and paying reparations to France and Britain after World War I, the Versailles Treaty, and so on. All of that contributed to a global disintermediation and an unwinding of the world that existed before. So I don't mean to monopolize this chat, but when Donald Trump talks about the late 1800s and the Gilded Age and what came out of that, I don't disagree with that, but I think the parallels are not exactly the same for any number of reasons, not the least of which was we were not necessarily in a position of trying to sort of bamboozle or bully our way into a situation. And by the way, I'm someone, before anyone thinks I'm trying to be political, I have been talking for over 40 years since I gave a keynote address in 1976, 50 years, at the American Footwear Association in Boca, next year in Palm Springs, in which I pleaded with the attendees, who were the CEOs of virtually all the big apparel and shoe companies in the United States. And I begged them to put pressure on their politicians to stop the drain of American workers. Essentially, what we want now and what Trump is trying to do is what we call reverse Nixon, because Nixon was doing that to bring China a little bit out of the strict communist into becoming what I call commie capitalists. And that was achieved, but too much for too many years. So the problem is that was 1976. This is 2025. I don't think you can unwind and change all of this on a dime. So while I absolutely respect the chart, and you're looking at key levels, I can laterally see where your arrows are pointed.
Yeah. Let's talk about these key levels. So
they're going to break. How's that?
Okay. So yeah, we're looking at kind of a sort of we had a top here. Back in 2022, 2023, I can actually pull up the chart. I took a screenshot of this, but it did act as resistance in the past. And then it's also acted as support and had some significant bounce off of this level, and the stocks themselves, the pricing on some of these big tech names. I mean, you see Nvidia's under $100. You see Meta's come down a lot in these last 6 weeks. Are we getting to the point where the stocks themselves are so attractively priced that will inherently bring buying pressure into the market?
Same story, not necessarily. And again, very simply put, every single one of these big companies that is a multinational that does a lot of business abroad, and everybody by now knows that about 40% of the multinationals in the S&P, on average, 40% of their revenue is from foreign sources. And you could even have domestic companies that nevertheless import components for their products. So you put that together and it comes back to the fundamentals. If you have, for example, a CEO come out next week and say, the quarter was great, but I can't give you guidance for the next quarter. We suspect it could be okay or it could be horrible. What are you going to do with a company that has their processors made in Taiwan? If Taiwan really is going to a zero tariff, those stocks will bounce. If Taiwan is not, they won't. What I'm trying to say is that the COVID low, for example, or the 2000 low, those were financially based lows. They weren't product component supply based lows. They were unrelated to global trade.
So let me ask you this. So it sounds like, so in this market of uncertainty right now, where, I mean, uncertainty seems to be just a repeated word we're hearing all of 2025. Uncertainty. In a way, has this policy announcement, or this Liberation Day, or Make America Wealthy Again, whatever you want to call it, does that add more certainty because we know what we're dealing with now?
Does it add more certainty? It adds more certainty that there's generally going to be chaos. Trump is doing, in an overarching way, he's doing what he campaigned on. This is what he said he was going to do. But he's gone beyond that. I'm not going to get into the politics of him attacking the law firms or the judges or insulting other leaders. I believe you could do the same things behind the surface. When he did the renegotiation of NAFTA, the United States, Canada, Mexican deal in his first term, he made the deal, and then they came out in front of the TV cameras and told us that we had an agreement. They allowed Mexico's leaders, Canada's leaders, it could be any leader, to save face. You follow what I'm saying? And if you insult the leaders and you make demands like we did with Canada out there in front of the TV cameras, like a reality show, you almost give no alternative to the leader of the other country, but to toughen up and stand up to you because he has to view you as a bully. If you do it behind, I'm sure these guys call each other names and get vulgar and everything else on phone calls, in private meetings, but try to resist doing that in front of the cameras. That's all I'm saying. Maybe I'm arguing methodology of economic diplomacy.
So I'm sure they have more colorful words on their private phone calls.
I can't imagine there are very many more colorful words.
So for those of you who don't know, this is the second time I've brought Gene on the show, and he has the Inger letter, and I'm going to highlight some of his most recent. We're going to talk about his most recent Inger letter, where it's an email that he sends out to his clients, and it's stock market fundamental and technical analysis, and he does. It's always an entertaining read, and it's long, and you know, in this day and age of AI slop where everything is just AI this, AI that, it's refreshing to see someone thinking and putting pen to paper and writing out their thoughts. So great job with the Inger letter, and your consistency as well, bringing your view and knowledge to your clients. So I have on my screen also.
That's very kind of
Thank
you.
you. Thank you.
And may I say though, when you said the word clients, they're subscribers, but as far as clients, because after we did a former video, I had a couple people ask me about money management. I'm retired from that for over 30 years. So I'm not in money management. I sold that out to an insurance company back in Beverly Hills years ago, and I have nothing to do with money management. I don't do private consultations.
Sure.
Just my daily briefing and whatever podcast or video you and I might do, for example, and my comments on X.
So I have this fear and greed index pulled up, and we're at the CNN Fear and Greed Index, which tracks fear and greed in the markets, and it's been going on for a long time. And since this fear and greed index has been measuring the investor fear or greed in the markets, we're at some of the lowest levels. We're actually at lower levels than during COVID. So do you think that's warranted?
Yes.
Okay.
Is the simple answer.
Okay.
Now, Trump will say that it's not warranted. He did say that. They asked him that on the airplane flying down to Miami or West Palm the other day. And he said, he didn't say, as Roosevelt said, we have nothing to fear but fear itself, which was his famous address. By the way, after Roosevelt said, as the Depression was beginning, we have nothing to fear but fear itself, the market descended to lower levels. So just because a president tries to encourage people, you cut interest rates, you will get a sharp rally. I should point out, I'm not saying we aren't going to get a rally. I'm saying that we should wash out, have margin liquidation, bounce up, drop back a bit, and then probably around 10:30 in the morning Eastern time on Tuesday, we turn around and rally into the middle of the week.
So let's go into.
There's a slight cynicism with that, by the way.
So I want to give my view on this as well, and my view on it is I'm not as fearful about this. I mean, we're already seeing. So one thing I learned during the quantum crash. So this is a quantum focused channel. And one thing I learned is investors often run for safety before they look for answers. And there is a lot going on. I acknowledge there's a lot going on, in the economic ramifications, and the consequences can be dire, surely. But in order for us to actually know if that's the case, time is we're going to have some time is going to need to go by, and we're going to need to see some earnings calls, and we're going to need to see some guidance. So even speculating how to value these companies at this point in time, when any day our leadership can come on and say, okay, we've agreed with Taiwan, 0 tariffs both way. Well, I think that would be actually a very healthy catalyst for the market if we're seeing deals like that. We saw Musk Saturday say the optimal situation with EU and US is 0 tariffs both ways, so free trade. So if the outcome of this is more free and open trade, wouldn't that be a very good thing? Because everyone is so concerned right now.
Well, Gene, I don't disagree. Didn't I just... Yeah. I think I just referenced Musk's statement a few minutes ago, and I said, the question you asked is fear appropriate, and the answer is sure. That's why the hedge funds dump. But you didn't ask me, would I be buying the weakness?
And have you been buying the weakness?
Not yet.
Okay. Well, I have. I've taken some position, some cash off the sidelines finally here. Especially on Thursday and Friday, and the prices for some of these stocks are just simply irresistible, irresistible.
I have said for weeks and weeks and weeks, I will focus on domestic centric stocks. I think those stocks, and you can include some of our small caps, you can include quantum, especially where they are domestically oriented, and I think they are. Basically, I'm saying that's what you want to own, and that is guilt by association. The psychology, it became so bad that everything dropped or eroded. not necessarily because of big sellers, but an absence of bids, a lack of buyers. And that's going to turn around. And even in a bear market, you're going to get rebounds. And we don't know where this is going to be in 2 months. I suspect Trump wants to be right. I know I have an idea of what he is contemplating. And maybe you want me to touch on that. I don't know. But it's going to lift most boats, not all boats. If China, he said China made a wrong decision by retaliating with tariffs. What he wanted to hear was zero tariff, and he didn't hear that. Right. He is hearing that from Taiwan, but Taiwan is sort of competitive with China. China hasn't invaded yet, and I hope they don't in the middle of this. But that's a whole nother geopolitical discussion, which we could do sometime. But my suspicion is that we're setting up for a sharp rally, but it's not necessarily happening out of the box tomorrow morning. This is Sunday afternoon, unless there's a very favorable reaction in the futures to things like Taiwan, Thailand, Vietnam, and maybe some comments from European leaders. We don't have that yet. So if you were a buyer late last week, you're probably going to be okay with that. I might get slightly better prices and weakness tomorrow.
and I'm not even really trying to time the bottom. It's just like I'm buying good companies that I feel okay with, even if the share price goes down a little bit.
But are you buying companies which have a majority of their revenue base in North America?
So some buys were Amazon, Google, Microsoft, NVIDIA, some quantum names. I actually opened a position in QUBT after our last conversation. Let's talk about quantum for a second. So I just got back from Qubits 2025 earlier this week, actually on Monday and Tuesday I was there. And quantum relatively in this market seems to be doing okay. Not great. No stock is doing great in this market. But there's some days in the last couple of days where we've actually seen names like Apple take a larger percentage decrease than quantum stocks, which is pretty crazy to say.
Well, not really, because Apple has been mischaracterized even by Howard Lutnick as going to make iPhones in the US, and you won't have 100,000 Chinese screwing little screws into the mainframe of an iPhone. That's not what Apple's going to make in the United States. They make data center servers in the United States, and they've already made some computers for years, like the Pro in Austin, Texas. So this is actually not news. It's an expansion. There's been no indication of making iPhones other than China, India, and Vietnam. And however, I predict that there will be sufficient agreements or waivers that you're not going to have to pay $1,500 or $2,000 for an iPhone.
Just $1,300, $1,400. No way am I spending $2,000. $1,600 is my limit. That's just saying already with the cheaper manufacturing that we're already paying a high price. So
even before the tariff issues, there was speculation that 2 years from now, Apple will introduce a rather large folding iPhone. You probably saw that. And the projected price, $1,995, $2,000 before any tariff.
So you see, I have on my screen here. So this is from your last letter, the Inger letter.
Okay.
And you have, I've just gone through and highlighted a couple points I want to just talk to you briefly about. I also have Dan Ives' clip pulled up here. So let's start with this. JP Morgan upgraded its recession prospects to 60%. Do you agree? Do you think there's a 60% chance we're headed towards a recession?
Well, my second sentence, I've felt parts of the U.S. have been in recession for months. Obviously, the upside in the S&P to the record highs was dominated by half a dozen stocks, as you know. The broad market never really came back all that much, even late last year, much less after the election. And so, that's why I say so many of these stocks did not get overpriced and are still underpriced. And that would include some of our national security and border control related stocks. And I think those stocks are just meandering in a narrow range at low prices. And we'll see if they take off depending who gets what contract.
So yes or no, Gene, recession or not?
I just said, I think we're already in recession.
You think we're right now in parts of the economy are in a recession?
Yeah,
okay.
Parts of the economy.
Okay, gotcha. Okay, you say.
And by the way, I can prove that simply. The majority of increased jobs in the last 2 quarters of the Biden administration were in government hiring, now being fired, and in healthcare. So you did not have a great increase in industrial, even engineering hiring during that period of time. The country was already sagging, and you had the impression of greater strength.
So let's quickly watch this this first 30 seconds on the Schwab Network, where Dan Ives, the biggest tech bull maybe on the planet, is asked about these tariffs, and then
yeah, well, I sent Dan a note at one time, and I asked if I could be his professional personal shopper, and send him my tailor.
All right, let's take a listen.
Correction territory, but in bear market territory. Dan Ives, managing director, is here of equity research at Wedbush Securities. Dan Ives, glad you're here because we're seeing some of these names down 10, 15% in 2 days. So what do you make of it?
I mean, Nicole, it's an economic Armageddon. These tariffs, the way that they're laid out. I mean, in my opinion, it could take the tech industry back a decade if they were implemented. Me and you have talked for many, many years. I am not one to get caught up in when stocks sell up, always a longer term view, and that's being, uber bullish on tech for the last 15 years. But this is a structural change. It's the hearts and lungs of the supply chain, and that's essentially what's happening. That's why it's been, I view it just an epic disaster.
Okay. So he was also on Amit's live stream on Friday at market close, and he sounded pretty sad. And when Dan Ives is sad, then you have to wonder, okay, what the fuck is happening?
Majid, every one of these guys knows the same thing. He just addressed the same thing that I did when he said, if these tariffs are enacted as outlined, if. And the problem with the future, as usual, its history is not written yet. And the problem with technology is always the same. Technology, somebody else with something new, which is why China's DeepSeek shook out so many AI stocks at the time. What Dan is talking about is, you notice you don't hear too many of these guys that have been around a long time jumping on the bandwagon of it's going to be like 87, 90, it's going to come right back up. I think there'll be a bounce, but there's no justification for a record high in the S&P unless you do something dramatic. And that's something that I have in the back of my mind, which I was going to share. I'm not sure I should. I'm developing the thought, and that is whether we're going into a new world order, which is more about sphere of influence, the Western world versus the Eastern world. China is going that way with the Belt and Road Initiative. And the EU, Trump came out and said the EU was formed to attack the United States. No, it wasn't. The United States actually assisted in forming the EU in 1957, so they would be an economic bloc and have cohesive synergies and common interests instead of being at each other's throats. And that's how you prevent wars, right. Unlike what we're dealing with in Ukraine.
And it's very possible that we are. I mean, I think it's pretty clear that things are changing in the world, and people aren't usually very comfortable with change, especially change on this scale or magnitude, because we don't know what the outcome of that change is.
Majid, I'll ask you, what's your opinion if you had North America, US, Canada, Mexico, and the EU in a common trading bloc, and perhaps throw Japan and Taiwan? into that? What happens?
If everyone was getting along, or if
No, if we form a common economic bloc beyond ASEAN, which we used to have, beyond the EU, put it together as a giant free trade zone.
I mean, I'm pro free trade, for sure. The more free trade, the better. This is to put it simply. Now, I wanted to pivot back to the Inger letter, and
before you do that, I'd say the answer is if you were able to put together that block, that's how you get an all-time high in the S&P.
Yes. So you said there's this old saying, fade euphoria and buy despair. And what that reminded me of is Warren Buffett's famous quote, be fearful when the markets get greedy, be greedy when the markets get fearful. Are we at the point where it's time for the long-term investor to start getting greedy?
It depends in what sector. If you're asking me about quantum stocks, probably an extreme weakness accumulate. If you're asking me about Big Bear, I'd say absolutely. Although you buy part of the position now and you buy the balance after the vote on the 11th of April, which will determine whether there's dilution and how much. And you won't get it cheaper, especially if they happen to offset that with some sort of contract announcement. So we'll see. Dan Ives was very bullish on SoundHound, and SoundHound is less than half the price of what it was.
Sure.
And you may recall in our previous comment or discussion, I talked that I had sold out all the warrants, and then they went a little higher. Now they're less than half the price. I may buy them back, and maybe it'll be tomorrow, maybe not. And
Sure.
Big Bear, I'll probably add to positions. But I'm going to keep something in reserve on that particular stock to see what happens after the vote. But I think they're clearing the decks of the garbage from behind, and it's going to be compounded quarters of growth. But there's a rumor that I'm a bull on Big Bear.
Yeah, likewise. I think it's an irrational attachment for some reason. About October or November of last year, I found out about this company, and I'm like, what the heck? I really want to see Big Bear succeed. And you're not supposed to get emotionally attached to a stock, but there's something about Big Bear. And it was nice to see it run up to $10 or $11, and now it's sold back down to that $2.70, $3. But
first of all, Big Bear was a bit in trouble. AE Industrials, which controls, like at this point, 47% of the common stock, they put it together with Pangiam, the merger. That's why you had all the debt, which is getting unwound now. And that relieved it from trouble. They moved the CEO from Pangiam to become president, now CEO of Big Bear. And that's one of their only two public companies, the other being, was it Redwire? And Redwire, the CEO of Redwire happens to be the chairman of the board of Big Bear, Peter Canito. But I think Kevin, who was formerly head of Customs and Border Protection, briefly director of Homeland Security, I think he's clearing the decks. And I don't know this, but they're going to be at a border control conference this week. They're going to be at the Navy's League's annual Sea, Air, and Space Show out at the Gaylord Palms outside Washington, D.C. This week. This is a company getting set for growth, not contraction. And so I suspect
100% agree.
I don't care. Pardon me?
100% agree. And we already saw that people are looking for the next AI play. They're looking for the next Palantir. The comparisons, while they're not a one-to-one, we do see some definite positive signs that Big Bear is trying to clean up their act.
Well, I wish they were more transparent with the analyst calls and so on. But I think that's coming. I don't know that. I have personally urged them to with emails to them. I don't know them personally, but I've emailed and had a little bit of chat. And I think that this is a preparation, as you say, for growth. And we'll have to see. But I don't believe, I think that AE Industrials put this combination together for success. Now, maybe they're doing it so they can package it and sell it to a major defense contractor. I don't know. But I do know one thing. This is a domestic-centric stock, which doesn't depend on components from China or global trade.
Let's go back to the letter.
Okay.
So you say so far. So speaking on tariffs, so far this is the most mismanaged policy strategy in 100 years, and I've heard this watching any news network. It doesn't matter what side of the political spectrum you're on. People just have this. You see it in the numbers and the approval rating, like how is Trump doing on the economy, and the numbers are just abysmal. So what, if you had to distill it down, what could the administration be doing better, and what is going so wrong?
I think they could be doing the exact same thing behind the scenes, as I said earlier, not in the face of all the leaders, forcing them to be, if Trump's going to be arrogant, Carney in Canada is going to be arrogant. It forces the EU, they will sound more erudite, more sophisticated, more diplomatic, but they will still retaliate. If this was done privately, maybe not. By the way, there's going to be a big event this week that probably will cause a rally in the market in and of itself, which we haven't touched on and no one's talking about. And it's not Netanyahu coming to the White House tomorrow, though he is, but it is Zelensky. And my understanding is they're very close to having a deal that is acceptable to Ukraine and the United States on the mineral deal, which ties in indirectly to security, though Trump will never say security guarantees. He won't use that word. And so Ukraine being the breadbasket of Europe and so on, it must not fall into Russian control. It has to stay Ukraine. And I suspect the market's going to like that if they cement that deal with Ukraine. Also, Marco Rubio, our Secretary of State, has said this morning that we have to be within weeks of a deal with Russia to end the war, or at least have a ceasefire. And I think you will. This is April, and you're getting into the hotter, warmer season. The mud is everything's thawing out, and you don't want these thousands of more people to get killed. And I don't think Putin wants that either. And of course, he's a jerk. That's not the point. But the point is, I think this is going to come to an end. You're going to see stabilization in the Middle East, stabilization in Ukraine, Russia, and free trade deals with at least several partners, and maybe this greater overarching and encompassing thing. But that's more in my head as a thought.
If I had to choose, and no, obviously none of us have a crystal ball and we can't see the future, but when I see that CNN Fear and Greed Index all the way down to 4, worse than COVID, it doesn't seem that investors, the public, are really taking into account what could go right. It's only about what could go wrong, but what could go right. And I think that's important for us to have a balanced view of what objectively is happening and the objective outcomes of all of this. And I think you touched on a lot of potentially optimistic outcomes that are good for the world, that are good for free trade and that type of thing. So, which takes me to the Inger letter again, where you say, if this is a controlled burn, not a Palisades fire, then it ought to work a low, but maybe not a classic climactic bottom yet. So talk to me about the difference between, is this a controlled burn in your estimation, or is this just an out of control fire?
Well, so far it's a Palisades fire, so it gets to a low. We get a bounce, as I typed. But I don't know that it's a classic bottom unless we see the fundamental progress or geopolitical progress, economic or geopolitical, that we just discussed. And that's why this is not simply technical. The technicals will look great in hindsight. You'll be able to see, okay, let's say you make a low tomorrow and or Tuesday morning, and you bounce 100 S&P points or more, and you probably will. And then the next day, Zelensky signs a deal with the United States. Wow, peace in our time. Then the market goes up another 100 points, and you'll look back, and the dip will be that we get at midweek or whatever will be a secondary test of the first low.
Do you know
it will always look like that.
It's so simple. If we just boil this down and we just get real simple with it, people are starving for good news. Good news has been elusive for weeks and weeks, and now we're going on a month and a half, 7 weeks of just this nonstop deluge of bad news.
I'll make it clear. I'm holding my domestic-centric stocks, which is not just Big Bear, by the way. There's a few others. and my long-term big cap stocks that I'm holding are from a very long time ago, holding those. Would I buy any of the big cap stocks? Not enthusiastically, but I would for a trade into extreme weakness. You follow me?
I'm following you.
An NVIDIA or a Meta, I don't necessarily want to be invested in long term.
Are there any Mag 7 tech stocks that, because they're all, so I kind of look at this, and this is the eternal optimist in me. I kind of look at this as a Black Friday sale for tech. Are there any tech stocks, as we know of all of the big seven, the Mag 7, that Tesla's taken the worst beating? But we know that robo-taxis are coming. We know that robots are coming. We know that that anytime Trump or Elon can pull the levers and pump the stock. So of all the Mag 7, if you had to buy one name right now, which one is your favorite?
I don't know that any are my favorites.
Interesting. Okay.
But I would probably say Amazon.
Amazon, yeah, and I've been loading up on Amazon. They just have their veins, their arms in so many sectors in so many ways. I saw Jeremy Lefebvre on YouTube. He does a lot of long form videos and analysis, and he's always saying, I just spent 100,000, 200,000 on stocks today, and he said that on Thursday or Friday, and it was one of my biggest buying days ever because and he said that with these tech names, these stocks, I thought this was a really nuanced point. But these big companies have ways of adapting and adjusting. So while it may look like the future is unclear or uncertain to the average investor, for these multi-trillion mega cap companies, they have ways of lobbying, making money, right, keeping that money coming in. So in these periods of uncertainty, just remember that these companies have tricks up their sleeve.
Okay, but I don't want to bet on those tricks. I want to bet. I want to bet on companies that have the majority of their business in the United States that don't rely on components from overseas. And this is what the president wants. And I actually agree with Peter Navarro and others about the necessity of making semiconductors in the United States, of making medications in the United States, and not being totally reliant on China, India, or anyone else. And not because we're going to fight a World War II war, and I think their mentalities are more in big hardware than they are in digital and drone. But you hear the discussions of $250 billion being spent on quantum and on AI and border control, and I prefer to focus on that. And then if I wanted to buy a Google or an Amazon, I didn't say NVIDIA, I would buy them for a trade. And if while the trade is ongoing, the global situation improves, maybe I'd continue to hold them. So yes, I agree. I've been saying of buying to spare. Warren Buffett would wait to see, he tends to buy higher and then they go higher. Have you ever looked at
Well, yeah, I mean, we could, even a Warren Buffett purchase could be a catalyst, right, in this market. And everything. Okay, so another thought I have is, for every action, there's an equal and opposite reaction, right? So we've seen now multiple 3% down, 5% down days.
Yeah, so
When are we getting that?
Tuesday
push?
morning, 10:35 a.m. Eastern Time.
To which day?
Tuesday morning, 10:35 a.m.
Oh yeah. Okay. So I want to close on this.
I'm being slightly sarcastic.
But
I did that once in May of 1970 in my early days on television in Los Angeles. And I said that on Friday, it's going to be Tuesday morning at 7:30 Pacific time. And it was, and that made the front page of the business section in the Los Angeles Times that following Sunday. So I'm having fun with that. But that would be the classic way after the margin liquidation tomorrow, and then a little residual selling Tuesday morning, and then you make your low and go up.
So let's close on this. I know before we started this call, you said ask you about the Chamber of Commerce. Well, today on the Quantum Bull, we got out an analyst piece. So we have had in the last 3 days, the last 3 or 4 days, DARPA and the U.S. Chamber of Commerce push to accelerate quantum. So if you go over to thequantumbull.com and head over to news,
That's a very nice piece that you wrote, by the way.
Thank you very much. We've done some deep coverage. We've done a couple of videos on this. I do want to ask your opinion. What do you take from both in this 4-day stretch, both DARPA and the U.S. Chamber of Commerce sort of accelerating their quantum readiness messaging?
Probably a couple of things. And first of all, may I call attention, you and Will Rich, who also does videos on some of these topics, did a very long but detailed quantum discussion from the D-Wave gathering at the Phoenician in Scottsdale the other day. And I would call attention to your viewers that are interested in quantum to check that out. And as far as the Chamber of Commerce, I've been critical of the U.S. Chamber of Commerce for years. You don't hear many CEOs talk about them these days. And why is that? Because it became the multinational globalist Chamber of Commerce because their focus was always on free trade, global trade. And I'm in favor of global trade, but within reason. And that's why we shouldn't go from one extreme, which is the last few decades, to the other extreme, which is isolationism and protectionism. I think it should be a happy medium, which brings the capacity to make medications and semiconductors increasingly back to the U.S. And I could mention domestic semiconductors that are way down, like Skywater, which makes you probably know them because they bundle the qubits for D-Wave, for example. They're the packaging, and they bought Infineon's fabrication plant in Austin, Texas. When is that stock ever going to go up again? I don't know. I sold it at 18. Now it's $6 or $7. Maybe I should buy it back. I don't know.
So I do want to talk.
I do want to say that my main point on the Chamber of Commerce with quantum is they almost have no choice because many of those multinational companies that they really represent have big investments in quantum. Amazon is going in that direction. And also Google is going in that direction. They have a chip. And so is Microsoft. So, right. And these are going to be domestic sourced, presumably, products. And so the U.S. Chamber of Commerce actually has to focus on the United States.
Yeah. And the way I see it is this is very, very critical, timely, important messaging. If you go back on my channel, even a month, 6 weeks, 2 months, we are currently behind China. China has more advanced quantum computers and they are spending more money. And this isn't a race that I personally think the US should risk losing because it could result in significant material and economic loss.
I did not know that China was spending more money on this.
Significant more spent. Their Wukong quantum computer, I believe they have 100 qubit fidelity, and they have over 2 billion visits. I covered it a couple months ago on my site, not remembering the exact numbers. But I think overall, Gene, there's a lot happening right now. There's a lot still to be excited about because we are with quantum on the precipice of a new technological age.
I agree with you, but we're talking about sectors.
Yeah.
I'm enthused on that sector. I'm enthused about border security stocks, aviation security stocks. And yeah, that sure comes down to our little Palantir known as Big Bear,
Yeah.
which won't be so little in the future, I hope. But my question is, when, or do you know, is the vote on the 250 billion or whatever it's supposed to be for quantum?
So there's a $2.5 billion bipartisan initiative, and then that was brought forward by the DOE, and then there's a $2.7 billion initiative as well. So I don't know when the vote. So here's in February 13th was when the bipartisan legislation introduced by the DOE.
Is that separate and apart from the border control legislation?
That is above my pay grade.
Okay, I too.
Yeah. But Gene, so I feel like we've covered so many good topics. I encourage everyone, if you're interested in hearing from Gene, getting his email in your inbox every morning or every afternoon, actually, is when he sends it.
Evening.
Yeah, I highly recommend the Inger letter. Gene, any closing thoughts on our conversation?
Well, thanks. And by the way, if they don't want to subscribe, it's okay. But they can still follow me for free on X, and I do at least one comment a day typically, which is I'm ampersand at stocks here on X. And I almost wonder with all the junk that's on X if I want to stay there, but I'm there at this point. And there's no charge for that. And I could, but I'm not. And my daily briefing, they can subscribe to if they want. And they'll hear about a lot of Big Bear and maybe some others. And at some point in the future, they might hear about an emphasis on LightPath again, but not necessarily just yet. And a couple others. And Airship. Do you ever look at Airship?
Oh, yeah. I have a good position in Airship.
And by the way, they are so quiet. It's radio silence from them. And that's so thin. Can you imagine? I don't know if their software is old or software. You're very good and you produce this.
Thank you.
Do you have a comment about their software before we go?
So I don't, but I do have a positive note for us to end on. So yes, I'm an investor in Airship. Yes, I believe in what they're going to do. But the market right now is filled with opportunity, especially because of the macro conditions for the last 6 or 7 weeks. So if you truly believe we're headed towards a recession and you want to time the bottom, good luck, because if you can actually time the bottom, people would pay you a lot of money to do that. What the reality is no one can really time the bottom. So if you like a company, you like the price, and you believe it has solid fundamentals, even the Mag 7 we've talked about, they've survived COVID, they've survived financial crisis, they've survived all these things. So if you look on a longer time scale, an index will increase. An individual company can fail, but our major indexes have always increased over time. So
and what about cooler?
That's gonna have to be for another episode. But this was a pleasure, Gene, and we're gonna have you back on, of course. But I really enjoyed the deep dive into all of this, and hope you have a great rest of your weekend. Futures open in just a few hours, so it'll be interesting to see. I'm predicting more red unless something substantially changes between now and tomorrow morning. But we'll have to.
Well, I agree. That's what I'm saying. And yes, I agree with buying fear, but don't necessarily expect the first bounce to be sustained unless there's some favorable news that follows on.
That's fair. All right, we'll leave it at that. Thank you so much, Gene.
Off to the gym.